Yo, what's up everyone? Welcome back. Patrick here, and moving on to the next example. And as I mentioned with all these examples, all of this here is written out in the lecture notes that you could find at the beginning of the chapter on the website, so you could print those out and save yourself some time. And it's also better organized. The question is in a nicer format in the lecture notes as well. So let's read through what we're given here. So ABC Incorporated had the following information in March. And the information that they're talking about is basically all of this over here, right? This boxed in area. And then in addition to that, we're told that the direct materials used was 90,000, manufacturing overhead was 100,000, cost of goods available for sale was 250,000, and cost of goods sold was 170,000. And then we have three questions to answer. So number one, we have to prepare a statement of cost of goods manufactured and cost of goods sold. Number two, we're told to assume 9,000 units were produced during March. And given that information, we have to find the average cost per unit for direct materials used and for factory rent. And then number three, we're told to assume in April, the next month, remember we're in March over here, the next month in April, the company expects to produce 10,000 units. And then what average cost per unit and total cost would you expect to be incurred for direct materials, which is a variable cost, and for factory rent, which is a fixed cost. All right, so starting with number one here, let's prepare this statement of cost of goods manufactured first. Right, that's, if you're asked to find both statements, that's the better one to find first because it's the first one that comes up on that flow chart. And so what do we do with a statement of cost of goods manufactured? Well, we start with the direct materials. So let's write the title here. So we have ABC Incorporated. We have a statement of cost of goods manufactured. And then this is going to be for month of March. So the first thing we're going to start with is the direct materials. Now, with this particular question, this is going to be a little bit weird at times. We're going to have to work backwards a lot. You're going to see the workflow for this is going to be a little bit different than the previous questions, why I wanted to go over this particular example. So with direct materials, what we do is we start with the raw materials at the beginning of the period. So the raw materials at the beginning of the period, which would be March 1st. So notice we're given that information over here, right? This 50,000. So this would be 50,000. And then what we do is we add purchases of raw materials, which we're given over here. It's 110,000. And here's where stuff gets a little bit weird. Notice that usually what we do is we subtract the ending raw materials. So we would subtract the raw materials on March 31st. But notice we're not given the raw materials on March 31st. We're actually not given any inventory figures at the end of the period. Raw materials, work in process, and then finished goods, all of those figures are for March 1st, and there's none given for March 31st. And so what we're going to have to do is we're actually going to have to solve for these because if you notice, if you read further, notice that direct materials used, 90,000, we're actually given that, which is the figure that we're usually solving for. But in this case, like direct materials used, we usually get it after netting all of this out, but the direct materials used, we are actually given that figure. It's 90,000. And so to complete this cost of goods manufactured, we actually have to solve for the raw materials at the end. And notice that we can do that because notice that all of this here, it's from that first line on the manufacturing flow chart, right? We take the raw materials at the beginning, which is the 50K, and then we add purchases, which is 110K, and then what we do is we subtract the direct materials used. Usually we solve for that, usually we put an X there, but notice we're given that, in this case, it's 90K, and then we end up having that ending raw materials. Right, so this here, this line is from the manufacturing flowcharts, the first line. And so notice that we can solve for this. So 50 plus 110 is 160, minus 90 gives us 70K. So 70K is the ending raw materials. So that's what would go over here. So we had to solve, and that's going to be a negative number, so let's put a bracket there. So we had to solve for this figure over here. The direct materials used was already given. Usually we're solving for that. Usually we're given these other three figures, but in this case, we had to solve for the ending raw materials to sort of complete this cost of goods manufactured, or complete this section of the cost of goods manufactured. The statement of cost of goods manufactured. So we got the direct materials used. So now what comes up is the direct labor, and direct labor, we are given that. I believe we're given that. Yeah, we're given that here, 42,000. So next up on this statement of cost of goods manufactured would be the direct labor, and that would be 42,000. So that's going to be right there. Right, so we have the direct materials section, and now we have the direct labor. Now the next section on the statement of cost of goods manufactured is the manufacturing overhead. So let's look through this information that we're given and see which items correspond to manufacturing overhead. So notice that we're actually given the total amount of manufacturing overhead, which is nice. So we know that all these items we're going to list, they're all going to sum up to 100,000. So notice that factory utilities, that would be one of them. Indirect materials, we'll have indirect labor. And then notice that the fixed selling expense, variable selling expense, advertising expense, those are all periodic or period costs, period expenses, so they're not going to be under manufacturing overhead. But then notice that the factory rent is a part of manufacturing overhead, but notice that we're not given an amount for that. So that's actually something we're going to have to solve for. So that's why we were given this total. So let's sort of organize this. Let's first write factory utilities here. So we got this 20,000. And then we have indirect materials, which is 11,000. And then we have the indirect labor, which in this case is 24,000. And then what's left? The factory rent. And that's something that we're going to have to solve for. And then we know that the total manufacturing overhead, when we sum all of these numbers up, let me put a line here, is going to be this 100,000, which was given in the paragraph at the beginning of the question. So if we take 100,000 and we subtract all these numbers, so we would get, if we total these up, we would get what? 35 plus 20, so 55,000. So what would be remaining for factory rent would be 45,000. That's the value we solve for. And we're actually going to need this factory rent figure for questions 2 and 3. If you remember questions 2 and 3, they're asking what the average cost per unit is going to be for direct materials used and for the factory rent. So we're actually going to have to use this number, right? So when we're creating this statement of cost of goods manufactured, we needed this number just to sort of fill out these categories here. But really, we were already given the most important number, this 100,000, right? This total is usually what we're trying to get in this statement. So solving for that 45,000 isn't as important here, but it is important for question 2 and 3. And so from here, now what we get at this point is we could sum these three numbers up. So we get the total manufacturing costs for this period. And if we sum all of these up, we would get what? 232,000. Now, what is the next line? What we do now is we have to add the work in process at the beginning of the period. So on March 1st. And notice that we are given that. We're given that. That's 22,000. So that's going to go here. But here is where the question becomes a little bit more complex. What's the next line? Well, it's work in process for the end of the period, which is March 31st. But unfortunately, in the question, we're not given that. And not only are we not given this, so let me put a variable here. We're actually not given the cost of goods manufactured either. So this is where stuff is going to be a little bit weird. And this is where we have to really work backwards on that manufacturing flow chart. Because notice that cost of goods manufactured, if we put a variable y there, that isn't going to be given either. And so what we have to do is we have to actually use the next line on that manufacturing flowchart. So if you remember the sort of running out of room here, let me write this over here. This could be like some side work. So we have the beginning finished good, or beginning work in process. Then we have the manufacturing cost, the total manufacturing cost. I'll put MC there. That's direct materials used, direct labor, and then the manufacturing overhead. And then what we do is we subtract from that the cost of goods manufactured, and then we end up with ending work in process. But again, we're not given the ending work in process. We're also not given the cost of goods manufactured. So we're going to have to solve for that in the next line, because in the next line, if you remember, what happens is we have beginning finished goods, and then we add this cost of goods manufactured, and then we subtract the cost of goods sold, and then we end up having an ending finished goods, right? This is all coming from that flow chart. So notice that the beginning finished goods, we're given that right here, it's 35,000. Cost of goods manufactured, we're not given, and we're not given the ending finished goods. So what is happening here? Well, if you notice, we're given cost of goods available for sale. And if you remember, these two numbers here added up, the beginning finished goods plus the cost of goods manufactured, that gives us the cost of goods available for sale. All right, so this is really tricky in terms of working backwards and knowing how to solve for certain things. Because if we don't use this, we're given this, we're not given that, we're trying to solve for that. We're given the cost of goods sold, 170,000, but we're not given the ending finished goods. So we would have two unknowns again. So up here we have two unknowns, the cost of goods manufactured and the ending work in process. And then over here we would have two unknowns, cost of goods manufactured and the ending finished goods. But because we were given this cost of goods available for sale, we're given this total over here. And we're given the beginning finished goods, so we could solve for that cost of goods manufactured. So it's a little bit tricky. We have to use this sort of sub portion of this line here to solve for that cost of goods manufactured. We don't use this whole line here. We use this portion, right? So the cost of goods available for sale, the 250,000, I'm going to write 250K here, is equal to the beginning finished goods, which is 35K, plus that cost of goods manufactured, which we let be variable Y. And so we could solve for Y here, bring the 35K over, so 250K minus 35K would give us 215K, 215,000. So that's this number over here, this 215,000, is the final number on this statement of cost of goods manufactured. And now that we have this number, we could actually solve for this X, because now we have this, the total manufacturing cost, which was the 232,000. We have this, the cost of goods manufactured, which is the 215. We could solve for that ending work in process, which is going to be on March 31st. And so when we solve for that, we would end up having, let me erase all of this here, kind of give myself some room for this side work here. So we would have what? We would have the, if we follow that same line from the manufacturing flowchart, we have the beginning work in process, which is 22K. We have the total manufacturing cost, which is 232K, this right there. And then we're subtracting that cost of goods manufactured, which is the 215K. And then when we net these out, that's going to give us that ending work in process on March 31st. And when you net those numbers out, so 22,000 plus 232,000, that would give us 254,000. Subtract 215,000, that would give us 39,000. So that there is the ending work in process on March 31st. So that's the plug variable that we're going to throw in over here. So this would be 39,000 like that. And we're subtracting that number, so let me put it in brackets. All right, and now notice that we've fully filled in that statement of cost of goods manufactured. This direct materials used, there was a little bit more work at the beginning. I erased it just to save room on the whiteboard. I had it at the beginning. But including all that, that's the full statement right there. So if I erase this box that I made here for the side work, this is basically all of it right here, right? So there was a lot of stuff that we had to calculate and we had to go backwards, and I think the trickiest part was coming up with this number, this 215,000, just recognizing that we had the cost of goods available for sale, and then we had the beginning finished goods. And so the difference between the cost of goods available for sale and the beginning finished goods gives us that cost of goods manufactured amount. So make sure that you're pretty solid with the terminology that is present in that manufacturing flowchart. So all of this here, this is the statement of cost of goods manufactured. Now we also have to make the statement of cost of goods sold. What's nice is that that statement is going to be a lot more simple than this one. What we actually do is the first line on that statement, if you remember, is the cost of goods manufactured. That comes from this statement, which is the 215,000. So we start off with the cost of goods manufactured, which is the 215,000. And then what we do is we add, what do we add? We add the beginning finished goods. So we add the finished goods at the beginning of the period, which was on March 1st, which was 35,000. And then what happens is when we sum these two numbers up, what does that give us? That gives us that cost of goods available for sale, which was already given in the question, cost of goods available for sale. So that, when we sum these up, that's going to give us 250,000, which corresponds with that number that we were given. And then from here, what we do is we subtract the finished goods at the end of the period, which is March 31st. But again, we're not given this number. But what we are given is actually that final amount of cost of goods sold. Right here, it was given in the question, that 170,000. So cost of goods sold is 170,000. And so we could solve for this amount over here. So basically we're going to have 250,000 minus this finished goods, March 31st, and that has to equal 170,000. Well, when we isolate for that x, bring this over, we would end up having 80,000. So 80,000 ends up being the finished goods on March 31st. So this here would be 80,000, like that. Okay. And so, and then that's, let's put that in brackets since we're subtracting it. All right, so that there ends up being the statement of cost of goods sold. Again, a little bit tricky because we have to solve for that. We were given this final number, right? But definitely easier than the statement of cost of goods manufactured, in my opinion, for this particular question, okay? So this question is a little bit unique. It's a little bit weird. We had to work backwards a lot. So from these statements, usually when we're creating these statements, we're solving for these amounts, these final amounts, the cost of goods manufactured and the cost of goods sold. In this case, we're given a lot of those final amounts and we had to work backwards and fill in other categories on the statements. Okay, and so we're done number one. Now number two, if you remember what it said was assume that 9,000 units were produced in March. So in March, we're assuming 9,000 units are produced. And then we're told to assume that in April, let's actually do 2 and 3 together here. In April, we're told to assume that 10,000 units are going to be produced. Now, what we're asked to do for number 2 in March is find the average direct materials used. This is a DM right there. So average direct materials used per unit. Right, the average cost per unit for direct materials used. Well, what we would do is we would take that direct materials used amount, which was, if you remember, 90,000, and we divide it by the number of units produced, which was 9,000. And so what do we get here? We would end up getting $10 per unit for the direct materials used. So that is the first part of number 2. And then we're also asked to get the average factory rent cost. Average factory rent cost per unit. And if you remember, on that statement of cost of goods manufactured, we actually solved for this and we got 45,000. And so basically it's the total amount, 45,000, of that factory rent that we had to fill in, solve backwards using this manufacturing overhead figure we were given. We got to take that and divide it by the number of units produced, 9,000, and so that would be $5 per unit. for March for the average factory rent cost per unit. So the average direct materials used per unit, $10 per unit. Remember, this is a variable cost as well. Right, we were told that. And then this here is a fixed cost. The total factory rent is a fixed cost. But if you want to get the average factory rent cost per unit, you take that total factory rent divided by 9,000, which gives you $5 per unit. Now in number 3, we're asked, assuming that 10,000 units are going to be produced, we have to find out what are these unit costs again for direct materials used and for the factory rent, and what the total amount is going to be. And knowing that this here is a variable cost and this is a fixed cost is really important for number 3, for April. So notice that because this is a variable cost, the direct materials used, remember what are direct materials used? It's basically the traceable amount of raw materials that's used on the product when making the product. And so it's going to be a variable amount. The more of the product you make, the more direct materials you're going to use. And so the trick is knowing that this amount here is going to be the same. So the average direct materials used per unit, because it's a variable cost, because it's directly traceable to the product, it's still going to be $10 per unit. That amount is not going to change. But what is going to change, because there's more units being produced in April versus March, is the total direct materials used. The total direct materials used is going to be that unit amount, $10, times the number of units produced, 10,000. Let me actually put these in brackets, which would be 100,000. Okay, so in March, the total was 90,000, but in April, because it's a variable cost, the average is staying the same, but the total is going up because there's more units being produced in April. All right, so that's the trick. Versus with the factory, it's the opposite. So what's happening is with the factory, because it's a fixed cost, the factory rent is actually staying the same. So the total factory rent even though the production went up, that total rent is still staying the same. It's going to be $45,000. Right? We're told in the question that it's a fixed cost. So the total factory rent is staying the same, but then the average factory rent per unit is going to change, because we're going to take that total amount, that same total amount, 45,000, but now we're going to, instead of dividing it by 9,000, we're going to be dividing it by 10,000, which would give us $4.50 per unit, which is a lower amount than $5 per unit. It's because that denominator was a bigger amount of 10,000. All right, so basically the differences between these two, the type of difference is because of the variable cost versus fixed cost. Because the direct materials is a variable cost, the average is staying the same, but the total, 90,000 versus 100,000, is different because the number of units produced is different from March to April. But the factory rent, it's the opposite, because the factory rent is a fixed cost. So the total amount, 45,000 and 45,000, is staying the same from March to April. But then the average is changing because the units produced are changing. Right? So hopefully you got that. Just wanted to sort of bring in this kind of extra question So you can see the difference on how we're dealing with variable directly traceable costs, which are direct materials, versus fixed costs, which would be like the factory rent. And again, we're going to go over in more detail variable versus fixed costs in the future unit, in the next unit. But yeah, I just thought this would be a nice introduction. All right, so pretty complex question, lots going on, but hopefully it made you understand things a little bit better.